Hey everybody, this is Randy McMullen with Amstar Mortgage. I've got a really important video for you today. We're going to talk about home values for 2022 and what we expect them to do for the rest of the year. Really kind of comes down to two things, kind of supply and demand. Obviously, if you've got a huge demand and a limited supply, you're going to see pricing go up and vice versa. If you've got a lot of people with houses for sale and not a lot of buyers, you're going to see pricing go down. So let's take a look at where we are now and what we see happening for the rest of the year. So for supply, and we'll start off with the first thing, which is we are currently 4 million homes short in inventory right now in the United States. So there is definitely a shortage of inventory. I think everybody's pretty aware of that. The second thing is forbearance. And a lot of people are expecting that all these homes that have been forbearance for the last couple of years are going to end up as foreclosures. And we're going to see this flood of inventory hit the market, and it's going to give us a big supply. Let me tell you why I don't think that's the case. I did a little math over here, and I assumed that if someone purchased a home in 2018 for $300,000, and just with a minimum 5% down payment, they would have a loan balance of $285,000. So I estimated taxes and insurance on that, and I came up with someone who's been in forbearance since literally June of 2020, which is about when they started opening that program, all the way through February of 2022. So maybe someone who was in forbearance for the entire period of 20 months. Well, if their total payment was $1,600 a month, that means 20 payments of $1,600, $32,000 got added to the back end of their loan. Now, if they had their loan for a couple of years, they probably had a balance of about $283 when they started in June of 2020. And then they added this $32,000 balance to the back end. So now they've got a balance of $315,000 on their home, more than what they paid for their home. But here's what's happened. In 2018, and I think these are really conservative numbers, 4% appreciation in 18, 3% in 19. I think that was probably 3 or 4%. 2020 was 10% appreciation. That's probably low. And 15% appreciation last year. And it ranged, we saw appreciation in Atlanta range from probably 12 or 13% all the way up to 20% or even higher. But I'm using 15% as kind of a general number. And then in 2022, probably at least 4% appreciation. I think we may have already seen that much just in the first 3 or 4 months of the year. But if you look at that, it takes a house that was $285,000, or actually worth $300,000, and at 4%, you had $12,312, and then $321, and then $350, $406, and now in 2022, that house is worth $422,000. And even with the balance added back on, they only owe $315. That house is not going to go into foreclosure. They're going to go for sale, and they're going to get top dollar for their home just like everybody else. So for that reason, I don't think that forbearances are going to end up in a lot of foreclosures. Now there may be some, situations where people just lost their jobs, deferred maintenance, and that type of thing, and we'll certainly see some of that. But I just don't think we're going to see a rush of foreclosures hit the market. The second thing under the supply, or third thing, is baby boomers. And why did I put that under supply? Baby boomers are on average between 58 and 76 years old. There are 71.6 million baby boomers. And here's what's happening. We're going to see them downsize, get smaller homes. We're going to see them get closer to kids. And we're also going to see baby boomers move to warmer climates. That's kind of obvious. We see baby boomers flock into Florida all the time. But we're going to see something a little different. I think we'll see more of them start parking in Georgia, maybe Blue Ridge Mountains, Big Canoe. Any of the resort areas in and around Atlanta would be a great place for retiring baby boomers. So that's going to have kind of two different impacts in that if you got the baby boomers who are inside the 285, they might want to move further out to get a little better quality of life, to get away from traffic. That's going to create some opportunities. On the other hand, we're going to have baby boomers from all over the Northeast United States. They're going to be moving south for the warmer climate. So ultimately, I think that's going to hurt supply a little bit because we're going to have more baby boomers wanting to move to the warmer climate still. And the last thing on supply I'm going to talk about is called the donut. And a good way to look at it, Atlanta's kind of a really good way to look at it. What's happened is homes inside of Interstate 285 have historically just gone up and up and up in value. But now what's happening because of work from home, there have been some lifestyle changes. Traffic yard. People want to get away from maybe all the traffic, the smaller yards, get a bigger yards for their kids to play in. And so that donut is basically Atlanta and then a 25-mile radius around Atlanta. They did a study after the work from home started taking place, going, geez, where will people be moving? Are they going to relocate across the country, far away? And what they found is most people relocated within about 25 miles of where they were. And a lot of times that's just to get away from some of the traffic and also stay close to family. So that will also impact supply in a positive way, because as you expand where people are moving, it just puts a lot more houses out there. That's going to help take some of the pressure off home prices. Now, on the demand side, we have another group called Millennials, which are ages 26 to 41, 72.1 million Millennials, the largest buying group, hitting their peak buying years from 2022 to 2025, putting a huge chunk of demand on the market. Then you've got the Sun Belt, which is a lot of people are starting moving into warmer climates, especially because of the donuts. Those that aren't moving 25 miles, they're going to be moving Texas, Florida, Georgia, Tennessee to get better weather, lower taxes, and overall a lower cost of living. So that's going to drive more people into Atlanta. Affordability is the one thing that could tamp down the demand a little bit. And that's going to have to do with how much of inflation, how much do home prices continue to rise. Again, with all this demand and the limited supply, we're still going to see some pricing pressure. And then the other thing on affordability is rates. What's going to happen with rates? We've seen rates take a really quick increase from the beginning of this year, from 3% up to probably 4.5% within about 3 months. What's happening with that? So what happened, the reason we had low rates, one of the reasons is because when the coronavirus hit and the economy started to stagger, the feds wanted to do something to help stimulate the economy. So what they did, they started buying treasury bonds, treasury notes to keep short-term rates down. They also started buying mortgage bonds. So prior to that, the way it works is when you buy a 30-year mortgage, most people don't stay in a house for 30 years. Very few people do, in fact. So what happens is those loans sell off. In other words, people either refinance out of the loan or they sell the loan and the loan doesn't stay for 30 years. So in any given month, you might see, as an example, $70 billion of loans roll off, refinances and purchases. In a normal market, the feds just buy 70 billion more. So those roll off, they buy 70 billion more. When the COVID virus hit, they increased their spending. When 70 billion rolled off, they were buying 110 billion. So literally they were adding $40 billion to their balance sheet in any given month. And they did that for a couple of years. Then they said, okay, we're going to taper this down. When they announced the taper, we saw rates start to go up just a little bit. They tapered the buying from 110 back down to the normal. Well, this week and here in early March, Fed Chair Powell said they might even considering reducing their purchase of bonds to help balance their balance sheet or bring their balance sheet balance back down. They boosted it so much by over $1 trillion here. Now they want to start purchasing less. So when 50 billion rolls off, the feds may only buy 50 billion, and now you've got 20 billion more that has to get sopped up by the market. Supply and demand, and that's going to put increased pressure on rates as the feds continue to buy fewer bonds, and we have all that pressure for rates to go up. So going back over here to affordability, as prices go up and as interest rates go up, it's going to make affordability just more of a factor, and it's going to push the number of people in the market down. And then the last thing, and this is always a big factor, is the economy and jobs. So as interest rates pick up, what's going to happen to the economy? So the Fed has said they're going to hike rates 7 times. One of the biggest misconceptions is people think, oh, that means mortgage rates will be going up 7 times. That's actually not the way it works. When they raise the short-term rates, the Fed funds rate, they do that to fight inflation. And by fighting inflation, that helps push rates lower. So the whole point of this, to fight inflation, is it will help push the long-term rates down as they fight inflation. So you've got a lot of factors in here. And I think kind of the major ones we're going to look at are shortage of homes, a lot of demand. and a lot of demand. So you've got some really big factors there that are going to continue to push, I think, home prices up until we get to a point where affordability becomes an issue, and then things could slow down a little bit. So I think we'll see home prices continue to rise for the first half of the year, and then maybe just kind of taper off a little bit, and that increase will slow down in the second half of the year. But there's a good chance we're going to see 5 to 7% home appreciation for the remainder of 2022. I hope that information is helpful. If you have any questions, please feel free to reach out and give me a call or shoot me an email. This is Randy McMullen with Amstar Mortgage.